Hello all, welcome to another Daily Horizon View. The date today is the 19th of the 6th, 2019. As always, we're looking at the ASX Exchange Traded Funds. This is our top fives. Our spotlight today is IAF, which is the iShares Core Composite Bond ETF. Should be an interesting one, so stick around to the end for a look at that. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Let's take a look at our top 5 percentage rises. Today we saw O, ITW, CNU, Asia, and EMKT. So for those of you who have forgotten, O is the BlackRock Crude Oil Index ETF. That's currency hedged and synthetic. It's a relatively small ETF in the scheme of things. There's about $20 million market cap for that one. Dividend yield is quite small at 1.48%. We saw a percentage rise today of 3.96%, which equates to 57 cents on a pretty good volume for such a small ETF of 24,100 shares traded. Top 5 percentage falls. We saw Bear, VAP, DJRE, QAG, and USD. So Bear is the BlackRock Australia Equity Bear Hedge Fund. That should generate returns negatively correlated to the returns of the ASX. So obviously if prices are going down on the ASX, that one should be going up and generating some returns for investors. That one has a market cap of 46 million or thereabouts. Today we saw a fall of 1.3%, which equates to 16 cents on a pretty good volume for that one, because it's such a small ETF of 11,600 shares traded. Top $5 rises. We saw IHVV, IVV, IAA, IHOO, and IVE. IHVV is the iShares S&P 500 Aussie dollar hedged. So that one represented by the S&P 500 index. So pretty much all the large cap stocks in the US hedged to Australian dollar. So you get a bit of exposure to that as well. Market cap wise, it's about $166 million. You get a reasonable dividend yield for a S&P 500 focused fund of 2.81, and it has a gold rating from Morningstar. So it's as high as you can get for that one. We saw a rise today of $3.78, which equated to 1.05% on reasonably low volume actually. So we saw 1,400 shares traded in that one. So you can see it's the unhedged variant. IVV is the next one below. So that's another good one to have a look at as well. So that's one of the biggest ETFs in the ASX Australian market. Top $5 falls, we saw VAP, IXI, Bear, DJRE, GDX. So VAP is the Vanguard Australia Property Share Security Index that has a market cap of roughly $1.3 billion. A very, very healthy dividend of 8.82%, and this is highly rated by Morningstar. It also has a gold We saw a fall in the share price today of 54 cents, which equates to 0.58% on reasonable volume of 26,300 shares traded. Top 5 number of trades. We saw VAP, STW, VAS, IVV, and VGS. So we've kind of gone over VAP already. So we saw a total number of 205 trades. People were probably moving a little bit out of defensive type assets, as VAP is a property investment trust. So they're moving out back into other more volatile assets, I suppose, such as oil and things like that, as we saw before in the first slide. So top 5 for volume, we saw today QFN, HJPN, STW, AAA, and Asia. So QFN is the BetaShares S&P ASX 200 financial sector ETF, relatively small in my opinion, rough market cap of $27 million, although you will get a healthy dividend yield of 4.47%, which is better than what you'll get if you actually put your money in a bank. So we saw a volume today for QFN of 448,300 shares traded. Looks to be mostly on the upside because we saw an increase in the share price of 15 cents or 1.3%. Top 5 for value: STW, AAA, VAS, QFN, and IVV. So STW is pretty much one of the bigger, or second or third biggest ETFs on the market, so no major surprise that we see it here number 1, as we do quite often. So STW is the State Street Spider S&P ASX 200 fund, and this one's designed to provide low portfolio turnover, accurate index tracking, so it tracks the ASX 200 obviously, which all should give low cost, and this is quite a low cost ETF. Market cap of roughly 3.7 billion. You'll get a pretty tidy dividend of roughly 4.36%, and this one has a pretty good rating from Morningstar of bronze. So we saw a value of $8.1 million of shares traded today. Most trades look to be on the upside because we saw an increase in the share price of 91 cents, which equates to a 1.48% rise in the share price. Okay, let's have a look at the spotlight now, which is IAF, which is the iShares Core Composite Bond ETF. So, investment objective of the fund, it aims to provide investors with the performance of the index before the fees and expenses, blah, 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 composed of investment grade fixed income bonds issued by Australian debt market, in the Australian debt market, sorry, I should say. Why would you want to buy this? It's pretty low cost, as we'll see on the following slide. Gives diversified exposure to Australian investment grade fixed income securities. So it holds quite a lot of bonds in the portfolio. So it's very simple access to the leading benchmark of the Australian bond market. Use at the core of your portfolio to seek capital stability and pursue consistent income. I'll have a bit more of a discussion about that later. Through that. So net asset value of $114.09, trading just below that at 114 flat. market cap of 813 million. Very reasonable management cost of 0.2%, mainly because it's a bond portfolio, so they shouldn't be charging a huge management cost for that. Distribution frequency is quarterly, so January, April, July, October. Dividend yield sits around sort of 2.23%. So IF provides a good mix of government, semi-government and corporate bonds with a medium to shorter term duration. This duration reduces the sensitivity of IF to short-term changes in rate expectations. So if rates go down, you shouldn't see that reflected in your dividend yield because of the bonds medium sort of term, sort of 4 to 5 year duration. So, in my opinion, long-term investing is all about building a portfolio that includes different types of asset classes. And the main thing is they're not related. So in this way, you can reduce your investment risk. So if one type of asset's going up and then one goes down, they should, if they're in even percentages, they should sort of match each other and sort of cancel each other out. So it should be relatively neutral. So including IF in your portfolio would be a good option to produce consistent income. They'll give you asset diversification and reduce your overall portfolio volatility, as mentioned before. So also have a look at BNDS, CRED, IGB, and RGB as comparisons, because we sort of don't rush in and buy one like the first thing that we see. We always need to check out the other options available. Research is the key. Just taking a quick look at the graph here. So it's performed reasonably well for a bond ETF over the life. So it sort of started out in early 2012. So your 10 grand would have turned into just over 14 if you've been invested for that whole time. On the right hand side, you can see the investments. It's all pretty non-script stuff, not much to talk about there, but you can see the maturity dates and also the percentage or the coupon percentage there. So what it's paying out. So as mentioned before, I may not have mentioned, this ETF has a silver rating from Morningstar. So that's a pretty good indication of the quality of the product. But I think it's definitely something that if you're looking for that type of stability in your portfolio, it's definitely worth having a closer look at. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.